Let's talk about something that's quietly changing the game for every single taxpayer in the UK. HMRC is gathering more data than ever before, and honestly, the implications are huge. We're about to get into exactly what you need to know. And just so you know, this whole discussion has been put together by the absolute experts at Pro Tax Accountant. These are the folks who live and breathe this stuff, helping people navigate these kinds of complex new tax rules every single day. So let me ask you a quick question. Do you sell stuff on Vinted? Maybe rent a room out on Airbnb? Have you ever dabbled in a bit of crypto? Well, if you answered yes to any of those, you really need to lean in for this. Because your digital life, all those little side hustles, they are now a completely open book to HMRC. The game has changed. All right, so here's what we're going to cover. First, we'll look at your digital money trail right here in the UK. Then, we're going to zoom out and see just how far HMRC's global reach extends. After that, we'll meet Connect, the tax AI that's watching everything. And, most importantly, we'll talk about how you can put things right and where to get the best guidance. Okay, first up, let's talk about that money you're making online. You know, the side hustle economy. A lot has changed, and it really affects pretty much everyone earning a bit of extra cash.
So here's the big one. As of January 1st, 2024, the rules completely flipped. Digital platforms are now legally required to automatically, and that's the key word, automatically, report their sellers' earnings straight to HMRC. It used to be that HMRC had to ask for this data. Not anymore. Now it just flows right to them. There's really no hiding.
So you might be wondering, what actually triggers a report? Well, the first threshold is super simple, 30 sales. If you sell more than 30 items on a platform within a year, it doesn't matter how much they're for, your data is going to the taxman. Simple as that. And a second threshold? It's all about your total earnings. If you make more than £1,735 on a single platform in a year, which is about the same as €2,000, your data gets sent over. And remember, you only have to hit one of these two triggers. It's either or. And we're not just talking about selling a few old jumpers here. Just look at the range of platforms this covers. It's staggering. You've got marketplaces like eBay and Etsy, property rentals like Airbnb, taxi and delivery services like Uber and Deliveroo, and even freelance hubs like Upwork and Fiverr. Think about a freelance designer in London picking up gigs. Yep, that's covered too. The net is just incredibly wide. Okay, here's a quick pro tip for you. The government does give you a bit of a break. Your first £1,000 of income from trading or property is totally tax-free. It's called the trading allowance. But, and this is the crucial part, if you earn even £1 over that £1,000, you are legally required to declare the entire amount, not just what's over the limit. So that's the digital trail in the UK sorted. But what about money you might have overseas? Well, this is where the net gets even tighter. Let's look at how HMRC's vision now stretches right across the globe. There's really no place to hide. This is all possible because of something called the Automatic Exchange of Information, or AEOI for short. The best way to think about it is like a global financial neighborhood watch. Over 100 countries have all agreed to automatically share financial data with each other. And the whole point? To make it basically impossible for anyone to hide money from their home tax authority. So what exactly do foreign banks tell HMRC about UK residents? Well, it's pretty much everything. They share your name, your address, your tax identification number, that's usually your national insurance number, your account number, the total balance or value of that account, and any income it's making, like interest or dividends. It is, for all intents and purposes, a complete financial snapshot. This really shows the new reality. It doesn't matter if you have a savings account in Spain, an investment portfolio in the US, or a holiday rental in France. If you're a UK resident, HMRC is going to know about it. The information just flows automatically, painting a complete picture of your worldwide assets for them to see. So, HMRC is getting literally billions of data from all over the world. How on earth do they sift through all of it? Well, the answer is a massively powerful piece of tech. And stay with me here, because what this thing can do is probably going to surprise you. Just to give you a sense of the scale we're talking about, HMRC's system holds over 55 billion individual data points on UK taxpayers. That number is just mind-boggling, and it's getting bigger every single day. And the system that wrangles all this data is called Connect. You can think of it as HMRC's very own AI detective. It pulls together data from dozens of different places, government departments, corporations, you name it, and builds this incredibly detailed financial profile for every taxpayer. Its main job, to spot any mismatches, any discrepancies between the lifestyle you appear to be living and the tax you're actually paying. And the sources it uses, this is where it gets wild. It goes way beyond your tax return. I mean, think about this. Your social media posts, your holiday photos on Instagram could actually trigger a tax investigation. Connect looks at that, plus flight passenger info, what cars you own from the DVLA, what you buy and sell online, your bank records, and even property data. So if you're declaring a tiny income but posting pictures from a fancy yacht, Connect is going to flag that in a heartbeat. But here's the catch. With all this power comes a really big risk. As many tax experts have pointed out, a system this complex can and absolutely does make mistakes. It can create false positives that launch stressful, expensive, and long investigations into people and businesses who are completely innocent. Imagine getting that dreaded brown envelope through your letterbox, knowing you've done nothing wrong, but now you have to prove it. That's the real danger here. And what's the next big frontier for this data-driven hunt? You guessed it, crypto. The timeline is already locked in. From January 2026, crypto platforms have to start collecting detailed user data. This is part of a new global framework. Then in May 2027, the first big data dump lands on HMRC's desk. The government thinks this alone will bring in over £300 million in extra tax by 2030. So the crackdown is definitely coming.
Okay, so we've seen how HMRC is watching. And yeah, it can feel a bit overwhelming. But there is a clear, structured way to get ahead of this, to make sure you're totally compliant. That's not all. Here's where you get to take back control of the situation. Look, the choice here is pretty stark. If you have any undeclared income, you have two paths. You can come forward and make a proactive, voluntary disclosure. If you do that, the penalties are way, way lower. You're in the driver's seat and it's much less stressful. Or you can wait. Wait for HMRC to find you. And with Connect, it's really a matter of when, not if. If that happens, penalties can be as high as 200% of the tax you owe. HMRC is in charge, and it can turn into a long, expensive, and stressful nightmare. And the good news is, the process of putting things right is actually really straightforward. It breaks down into 4 simple steps. First, you tell HMRC you intend to make a disclosure. That starts the clock and shows you're acting in good faith. Second, you get 90 days to sort everything out, disclose all the income, and work out the tax you owe. This is where professional help is absolutely key. Third, you make a formal offer to pay. And finally, you pay what you owe, and you can move on with complete peace of mind. Now, while the process itself is simple, calculating exactly what you owe, especially if it's over several years, can get really complicated fast. And this is where getting proper professional advice isn't just a nice to have. It's absolutely essential to get it right and get the best possible outcome for you. If you need to get compliant, the team of Pro Tax Accountant can give you completely confidential advice on making a voluntary disclosure. They can help you navigate all these new rules with total confidence. You can reach out to them directly on WhatsApp or by phone at 07985 689912, or you can email them at info@protaxaccountant.co.uk. So really, the big takeaway is this. In this no world of total data transparency, is waiting to be found a risk you're really willing to take? And just one final reminder, the information in this presentation is for general guidance only. Before you make any financial decisions, you really must consult with a professional tax expert, like the team at Pro Tax Accountant. Thanks for your time.